Hello, everybody. Roxanne Langley, Houston Financial Coach here. Hope you're doing well and looking forward to some cooler weather coming. I thought this week's video would be a good informational follow-up to last week's video about checking your credit report for mistakes. So many times, when you're in a conversation with either a prospect or even, with a client, and many times just in general, you start talking about credit reports and mistakes and debt, and it always kind of leads to, well, what about debt consolidation? Is it good? Does it work? What are the steps to them? What is the pitfalls? So, there's this week's video is about debt consolidation, how it works. This is the kind of the nuts and bolts of it, and if it is something that you should consider or not. There are several credible companies, credible independents out there that can genuinely help debt consolidation. But there are also, unfortunately, just as many, if not more, that are not credible. So my recommendation, like any financial decision, large or small, get the facts, do your research, talk to people you trust, and then do some more research. It's just you cannot do enough research in this particular avenue. And many times in some of my initial consultations, the idea of debt consolidation seems to be the answer when debt overwhelms your monthly budget. At first, on the surface, it sounds like a great idea, but not always. So let me take you down this journey. It's unfortunately, according to the Center for the Microeconomic Data's fourth quarter report of 2019, they have come out with, it's on household debt and credit. The report has found the numbers that the overall household debt increased by almost 1.5%. With a steadily rising account balances from over the last 5 years. And in fact, overall household debt is almost 27% higher now than it was just 7 years ago. Now with the way 2020 is and everything that has brought us to this point, it's likely these figures are going to be higher, if the more a credit card is reached, rather than cash flowing or reaching for your emergency fund right now. So this is something to be very aware of and to be careful with. So what exactly is debt consolidation and how does it work? A simple concept, and basically in layman's terms, it is you combine all your smaller individual loans into one large loan. So you lump all these little ones you have into one big loan. Now, the advantages. Consolidating your debt can offer a few advantages to the borrower. What most clients are looking for are, one, lower payments each month. And a debt consolidation loan will provide that. And many times it will. In addition, the interest rates are often lower than what, say, your current credit card interest rate is. Your result is that you will only have one bill each month to pay instead of, say, 4 or 5. Now, the disadvantages of a debt consolidation. And this is where you really have to work the numbers and be careful and watch. Despite a lower interest rate, you may actually end up paying more in interest by consolidating. Now you think, well, how would this happen? It's a lower interest rate. But remember, if you stretch the payments out over a longer length of time than you would have had on your individual smaller loans, the total interest you pay may well be higher because you're paying for much longer of a time. Now, so do the math before you jump into a loan that seems great on the surface. Check, double check, and triple check. To start paying off your debt with the end goal to becoming debt-free, the mindset and the momentum plays a major role here. So be careful. If you have multiple smaller loans and you start paying them off smallest to largest, you see the progress almost immediately, much faster and more often. And you knock out that first one, you pay it off, you get rid of it, and you move on to the second one, and you have that sense of accomplishment. So, don't discount that, because that plays a lot into the, getting to the debt-free step. Something else to be aware of is having debt on your balance sheet affects your net worth negatively. Many people are concerned with eliminating debt as soon as possible, and that is great. But a debt consolidation loan will usually do the opposite, because it keeps the debt on your credit report, in your balance sheet for a much longer time period. So how do you consolidate your debts? There are a few ways to handle debt consolidation, each having their own pros and cons. So, let's look at two of them. Let's say you want to transfer your balance from either one credit card or maybe 2 or 3 credit cards to another credit card with a lower or zero interest rate. Now, the pro, you're absolutely going to save money on interest. Absolutely. The con on that, not always, but many of them, there's a fee associated with doing that. So check the fine print. The potential pitfall on doing this is the low or no interest rate period is normally only temporary, meaning you must do this again when the period expires. So if, for instance, if you transfer to a zero interest rate and it's only for 4 months, and then it increases to, 23.99%, you may end up with a higher interest rate than you previously had on the card that you took it off of. So check the fine print on all of that and look at your time period, see if it's temporary, how long it's for, and if there's any fees. Now, the riskiest process of debt consolidation is taking out a HELOC or a home equity loan. The pro on this, and there really is only one, is it's usually available at a very nice low interest rate, a lower than normal rate than most credit cards or unsecured loans. However, it has a lot of cons and a lot of potential pitfalls to it. The con on a HELOC is it's only available to homeowners who have actual equity built up in their home. Another one is that there are usually fees associated with it, including the cost of having your home appraised, which that alone can be, in Houston, Texas, it is typically between $300 and $500 for an appraisal. Another con, if you sell your home, that home equity loan must be paid back immediately upon closing. So that is less money that you're going to walk away from the seller's table with. They typically have what's called daily simple interest, which means you are incurring interest is being added each and every day. So if you have a $1,000 loan at at an 8% interest, tomorrow it is going to be $1,008 and interest is charged on that. So you can really get caught into something there you don't want to be. There are two really big potential pitfalls about a home equity loan to use as a debt consolidation. Some home equity loans allow you to only pay the interest each month, which can give you a false sense of security, and it leads you actually into a debt trap of you've actually taken on even more debt than you originally had. So that is like exclamation mark to the infinite degree. Stay away from those. Another potential pitfall is you could lose your home. It could be foreclosed on, and the last thing you want to do is lose your home over a few $1,000s. So I really recommend to stay away from the home equity loans. There's a few things to look for when deciding if loan consolidation is the right move. First, the single monthly payment needs to be lower than the combined payments that you had on with all the multiple cards. Second, the interest rate on the new loan needs to be lower than the average of the interest rates on all of the other cards. So look at those interest rates, and if you range from, say, 18.99% to 23.99%, what is the average? Add that up, divide it by how many cards that you're looking at transferring, and see what your average interest rate is. And third, if you need to put up collateral, such as your home, your car, your boat, whatever that may be, but if you have to put up collateral, make sure you can comfortably make those monthly payments. The last thing you want to have happen is to lose a valuable possession that you've worked so hard for so many years. And, as far as your home is concerned, your home is your biggest asset. Don't run the risk on that. So I hope this, debt consolidation information it's very, this is a shortened version. I hope this will help you think about, is this something that you should even think about or not? Let me know what your thoughts are. Like, comment, subscribe to my video channel. Let me know what other topics that you'd like for me to research and find out about, answer your questions. And I thank you so much for popping in with me today. Thanks.